Brad Williams, Frugal Finance. Let's talk a little bit about reverse mortgages. I owned a mortgage company for a long time. One particular program I never ever spoke about or recommended were reverse mortgages. There's too many catch-alls against you as the borrower. I will go into depth as to why reverse mortgages are questionable. They're expensive. There's just too many provisions, too many requirements on your end that are not highly spoken about, but they're in the terms and conditions. In other words, the documentation you sign. So let's just go in. This is a summary overview, and then I'll have a detailed video on why reverse mortgages, it's something you really need to think about. There are a lot of alternatives, but proceed with caution. Don't sign the loan documents unless you understand how a reverse mortgage works. Know your options. Look at all your borrowing, housing options before making a final decision. In other words, bring on a roommate, bring on a family member, move, literally, sell your house, and just consolidate your life into a smaller package. I know, been living in a house for 40 years. It's hard to make that radical change, but it may be better in the long term financially. Have a serious talk with federally approved housing counselors who specialize in reverse mortgages. Stay away from the person trying to sell you the reverse mortgage. Talk to a housing counselor or post your comments. Post your comments and let's see what kind of feedback we can get. What is a reverse mortgage? A reverse mortgage is a special type of home loan for homeowners age 62 and older. The loans allow homeowners to borrow money using their home as a guarantee, just like a traditional mortgage. Unlike a traditional mortgage, with a reverse mortgage, interest is added to the loan balance each month, and the balance grows. Think of it as a pyramid. Turn over the pyramid. That's the starting point. Then you can see as time grows, that balance is going to continue to increase against you. It's just a negative all the way around. You're borrowing money at a very expensive cost. The loan must be repaid when the last borrower, co-borrower, or eligible spouse sells the home, moves out of the home, or dies. Most reverse mortgages today are called home equity conversion mortgages, HECMs, are federally insured. If you're interested in a reverse mortgage, first see an HCM or a reverse mortgage counselor. How does a reverse mortgage work? After years of paying down your mortgage, you've built up equity, the amount your property is worth today minus the amount you owe on your mortgage in any home equity loan or line of credit in your home. With a reverse mortgage, you borrow against your equity. The loan balance grows over time. You don't have to pay back the loan while you or an eligible person is still alive or living in the home, but you still have to pay taxes, insurance, and keep the home in good repair. There's the caveat. Keep the home in good repair. What you think is good repair and what the lender thinks is good repair could be night and day. And that's where the problems come into play. Because as you get older, you don't care. You're not going to pay for something that you know you're going to sell the house and you're going to pass that on to someone. That responsibility is somebody else. But the lender may think different, forcing you to do these improvements. Or if the lender thinks it is detrimental, then they will outsource that and burden you with that overall cost. In other words, they're just going to tack on the cost. Let's say the roof is old, but it still works. Well, these lenders could actually require that a new roof be put on the house. And who says what the process is? Who's bidding on that? What are they getting back in the way of kickbacks? So, it's just nasty to allow someone else to have control of your life. When both you, any eligible spouse, or your co-borrower passed away or moved out of the home, the loan must be paid off. Most people need to sell their home to pay off the loan, but neither you nor their heirs will have to pay back more than your home was worth. The only time this would make sense, a reverse mortgage, is if the market went upside down. In other words, the mortgage market went upside down. You've been in the house a long time. You're 15 years into a reverse mortgage and the property value is negative compared to the value of what's outstanding, the loan balance, then you just walk away from it and give the keys to the lender saying, there you go. Here's the terms of your conditions. Important questions. Can the people living with me stay in the home after I die or move out? Well, it's yes and no. Yes, if the person living with you is a co-borrower or eligible spouse, but they'll need to stay current on the property taxes and insurance and keep the house in good repair. No, anyone living in the house who is not a co-borrower or eligible spouse will be required to move out or repay the loan when you move out or die. If you live with a spouse or partner, it usually makes sense to apply as a co-borrower on the reverse mortgage. That way, the co-borrower can continue to receive payments from the reverse mortgage while living in the home after you move out or die. Now, again, I go into this argument. If you have a $600,000 house and you sell it, well, now you have $600,000 in equity. Could you A, not rent, B, buy a smaller place? That's the argument here. If you go and buy a smaller property, guess what? All you're doing is putting that equity into your investments instead of paying somebody for what you already own. It just doesn't make any sense to do a reverse mortgage. Sell your property, move to a smaller place, and take that equity and put it into a fixed income security, reap the interest, and you can get that on a monthly basis. You just solve a lot of problems. A house is a house. It's your shelter. But again, I just don't believe in having to sign a document and then be married to the requirements of a lender. Can I afford my living expenses, property taxes, and insurance? A reverse mortgage can help with these expenses, but it's important to have other retirement resources too. You could face foreclosure if you run out of money to pay property taxes, insurance, or other housing-related expenses in the future. Again, that's just a huge cost, because all they're doing is tacking it on the outstanding balance, and you're paying interest on that. Do I have to remain in my home for a long time? A reverse mortgage usually makes sense the longer you live in your home. A health issue or other event may cause you to move out soon. A reverse mortgage is an expensive way to cover short-term cash needs. And I wait until I'm older. It is usually best to wait, especially if you're in your 60s. Borrowing too soon can leave you without resources later in life. Remember to look at all your options first. Consider alternatives. Always consider alternatives. Move out, sell, wait. If you take out a reverse mortgage when you are too young, you may run out of money when you're older and need it more. The older a borrower is, the more money he or she can borrow. Other home equity options, a home equity loan or home equity line of credit may be a cheaper way to borrow cash against your equity. Well, again, you're robbing Peter to pay Paul. Okay, so you take out $100,000 in equity. You're just going to use that equity to pay off the loan. No, again, just a horrible method to resolve your problem. My recommendation is to move out, consolidate, buy a smaller location, buy a condo, buy something that is sensible, but puts 50% of that equity into your pocket, and then you can use that equity to live off of. Refinance. By refinancing your current mortgage with a new traditional mortgage, you'll be able to borrow. No, again, that's just a stupid idea, all right? Because if you're refinancing, that means you already have enough income to pay that debt. Okay, all you're doing is reversing a reverse mortgage to a normal loan. And again, that's just not solving the problem. Lower your expenses. Well, that is just the bottom line. Discipline in life. There are state and local programs that may help you defer property taxes and provide assistance. I don't agree much with this document. This is from CFPB, and I don't agree with any of this stuff. If you're in a bind and you have a lot of equity in your house, then sell your property. If you decide on a reverse mortgage, the best way to keep your ongoing costs low is to borrow only as much as you need. A line of credit, monthly payout, single disbursements. Say with a line of credit, you only pay interest on money you use. The amount of money available to you grows over time. Monthly payout, this can be a good choice if you need additional monthly income to cover daily living expenses. Single disbursements typically offer less money than other reverse mortgages. With a single disbursement, you will pay interest on your money when you don't spend it. No matter what payout options you select, there will be some restrictions on There'll be some. There'll be a ton of restrictions, okay? And I'll get into that in detail. Comment, let me know. Let me know if you're a reverse mortgage, if you love it, if you hate it. How do you get out of a reverse mortgage once you're in it? What restrictions are you running into? How cumbersome is the lender in interfering with your daily life? Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.